Well, hello everyone out there in Facebook Live land. I'm Blair Bryant with the Steller Group.
And I'm Emily Lomborg.
And here we are, we're doing our Facebook Live mid-year market update, real estate stats, the down and dirty of what's happening here in the Denver real estate market. It's been kind of a crazy year, Emily.
It's been a really crazy year, where we started in January 2022 to where we are right now, just after the 4th of July 2022. A lot has changed.
Yeah, and I'm sure you're seeing it out there. If you're looking for a house, if you're just turning on the news in any kind of way, you're seeing the big headlines, inflation, we're seeing interest rates have spiked, seeing things like recession start to creep in, like, you know, what are we dealing with? What do you feel? What's your kind of general overall gut feeling?
Well, I would say overall some of that stuff is true and some of that stuff isn't really true, right? One thing that is true is the real estate market is shifting a little bit. Everybody, I'm sure, has heard about that at this point. We have gone from, I think we spent 2 years on our market updates, at least since March of 2020, talking about record low inventory, month upon month upon month, under 3,000 homes on the market, under 2,000 homes on the market, record low interest rates, so tough for buyers. Sellers getting all the good stuff,
an inverted market,
exactly. And now we've seen that shift over the last couple of months, which is really healthy, and it's good for our market. And so, we can dig in a little bit to what's happening.
Yeah, I think a little bit of these market updates is trying to give you guys context to what you might be experiencing if you're looking for buying a house or you're selling a house. Like, where are we? Are we in a seller's market? Are we in a buyer's market? So we're going to jump right into these stats. We're going to go here to the Denver Metro Realtors Association stats that come out every month. And Emily, I'm excited about this stat right here. This is 6,057 active listings at the end of the month, up 65% month over month, and year over year we're up 94%. Why is that exciting?
I mean, that's exciting obviously because we started out the year, I think, right around 2,000 or less homes on the market. So some people are going to look at that and say, oh my gosh, a 65% jump from last month, a 94% jump from this time last year. The market is crashing. That's absolutely not true. Even with 6,000 active homes on the market at the end of June, what we're talking about is in the Denver metro area, a balanced market is around 16,000 homes on the market. That means there's kind of an equal amount of buyers and sellers out there, 16,000 homes. So even though we're seeing these really huge percentage increases and we're at 6,000, that's just getting us to kind of a healthy spot in the market.
Yeah. It's kind of like if you had a fever, right? And you were like at 105 degrees and all of a sudden it went down to 101 degrees. It feels so good, it's still a fever. And I think with our real estate market, 6,000 houses on the market, essentially, come on over this way. We're alive, so we're dealing with this. You just tell us to move around, Carl, if you need us to do that. I think the big news that we're trying to get our heads around as realtors is like, so what market are we in, right? Because it doesn't feel like the market of March 2022.
And it's not.
But June of 2022 still, when you look at a bigger, healthy perspective of what selling and buying real estate should look like, that 16,000 houses number, we're actually going to look at here in a second. We're still in a seller's friendly market, right? Buyers, more opportunity.
More opportunity for buyers, absolutely. And I think that's what is happening now is a lot of buyers are kind of sitting on the sidelines waiting to get through that first
summer
weekend.
Vacations and all that kind of stuff too.
But also waiting to get through that first weekend on the market. A home comes out on the market, they're not rushing out. All right, let's see if it makes it through the first weekend. And so sometimes we're seeing a lot of the homes make it through the first weekend on the market. But then even on the second or third weekend, it's not that unusual then to get 1, 2, even 3 offers. So we're seeing sometimes multiple offers 10 days in.
So we're going to go back to the stats here. So the other stat we always look at, and this is kind of a mid-year stat now we're going to be kind of focusing in on, it is the detached. So detached homes, active listings at the end of the month. Of course, we're seeing an increase here. We're at 4684. 65% up, 119% up. Good news for the market in general. And look at our average price, Emily. It's still at $810,000. Slightly up month over month and almost 12% up
from last year. And that's what tells you when people are saying, are we in a bubble? Is the market crashing? that stat right there is telling you it's not.
Yeah, and then the other one that's pointing out this month that we really don't talk about a lot is your attached listings. So condos, townhomes, things that are attached. So we have seen increased inventory here, yes, but really the big news for people who own these kind of properties is we hit over $500,000 for the average attached home for the first time ever in the Denver metro area. That's up a whopping almost 16% year over year. So again, coming back into frame, we're really looking at, where have we landed, right? Like, I think maybe the way I'm looking at it, Emily, is if you take the time machine back to those first real estate market updates we were doing here in March of 2020, it was, we're entering into COVID, who knows what's going to happen? Well,
right.
I think we found out what happened.
Right.
Like, we found
not what
that,
we anticipated.
Yeah, I mean, what happened is people couldn't go on vacation, people couldn't go to family reunions, people couldn't do a lot of things. So what they started to do is, well, if I'm going to be working at home, living at home, playing, having, like, home becomes way more important, maybe we'll move.
Yeah.
And that was fueled by low interest rates. And so for 2 years, we had this incredibly inverted market. And the stat I love to show, we're going to pull out a frame again, I'm going to show this one, because I think this is probably the one that gives us the best snapshot of what that COVID market looked like. So what I'm coming down to here, so bear with me for a second, is the amount of houses that sell every month and the amount of houses that are on the market at the end of every month. Okay, so here we go. We're in this wonderful graphic. So if you look at this line right here, that is the amount of houses on the market at the end of the month. And down here we have basically tracking from July of 2016. Then on the bottom, on the top part here, this goldenrod line, right? That's how many houses are left at the end of the market. So sales, the blue, how many houses are left at the end of the month. Now if you track to January of 2020, that's right when COVID kind of hit. And what we saw happen right here in April was an inversion of these two lines. You had more houses selling than were on the market at the end of the month. And looking, you can literally track it to what is exciting to me, which is right now, we are seeing the blue line get below the goldenrod line. So big picture, what does that mean? Emily,
basically,
doesn't want to interpret it all.
Going in and out. But basically what that means is it's going into a healthier market cycle. Right. We haven't been in a very healthy market cycle. We've been really low on inventory. The sellers have had all the power in any kind of negotiation.
Right.
Buyers, if you've been watching our videos, you've heard us talk about how buyers are giving up rights that they shouldn't be giving up. The car to state contract is written for a buyer to have a right to a home inspection, for a buyer to make sure the home appraises for what it's worth, to be able to, fair earnest money, to be able to get fair mortgage financing, things like that. And buyers were giving up a lot of that. Yeah. And now we're just going to go into a more healthy market cycle, we hope. I mean, that's kind of what the statistics are showing us right now. Where it's a little bit more balanced between, buyers have some choices out there, they have the right to negotiate, and they can be protected under the contract to buy and sell in the state of Colorado.
Yeah, one of the really interesting things I was reading about this week is how recessions aren't necessarily tied to housing housing depressions, right? Mm-hmm. So we all kind of have that memory of 2008, right? In 2008, if you owned a home and you're trying to sell it, it was going to take you 4 or 6 months easy before you probably found your buyer, and you might not be selling for above your price if you bought it in the past couple of years. And that was also coinciding with a economic recession, right? Recessions being at least 2 quarters with lower GDP and high unemployment. Well, what we're trying to figure out right now is unemployment's really, really low, right? I mean, employers are still trying to find workers. Right. Inflation's very, very high, so it seems like this is more of an inflationary type thing. And so we saw this week the Fed actually, not the Fed, but the mortgage rates lowered. So
they pulled back. I mean, they pulled back to about 5.5%. So that's a positive thing for buyers also. If buyers have kind of been waiting for the storm to end, yes, interest rates are higher than they were. They were, below 3% at one point. Now we're talking about 5.5%. Right. But that's still pulled back from what they were. And also, get it out there. The inventory is out there. Negotiation power is out there.
sellers are ready to get things sold,
interest
right?
rates won't stay where they are today forever. Get a home. You gotta live somewhere. Rents are also crazy. And then refi when the market changes a little bit, when the rates go down, but get in your home and secure your price, because we're not particularly seeing pricing coming down. And I don't really think we're anticipating, seasonally we always see a little bit of pullback in pricing this time of year, but we're not planning to see by the end of the year a huge pullback in pricing.
Yeah, remember, things are so cyclical in general, right? And I think if anything I see in this July market update is the fact that we're coming out of the COVID market and we're entering a more healthy market. Interest rates had to come up. They were insanely low for a long time. And I kind of get that gut feeling that we'll see interest rates sort of fall back to 5% probably. We don't know. Ultimately, if you talk to your parents, if you talk to your grandparents who had interest rates in the 12, 15, 18%, they're going to say, jump on that 6% loan. It's pretty good.
Absolutely. And so let's real quickly, we've been talking a little bit about the buyer side of it.
Oh, sure.
How are things for sellers?
Yeah, for sellers, Emily, you kind of just hit the nail on the head where, there's always this whiplash effect in the market in the summertime where everyone assumes best time to sell a house, right? Well, it's not a bad time to sell a house. It's just the fact that more houses are on the market because more people sell during the summertime, and buyers' schedules become very irregular. So where in March you put a house in the market and it was selling in the first day, first weekend, now it may take 2 to 3 weekends to sell. Expectations are everything, and remember, it does make a difference how you present your house. Staging makes a big difference, which if you don't know about the Steller Group, that's what we do. We do it for all of our client stage. And that presentation makes a difference, because now what's happening is buyers can actually go and see 5 to 6 homes in a weekend in the area they're looking at, in the price range they're looking at, and go, which one do I want more?
They have choices.
And those staged homes, those homes that are marketed professionally in a way that like Erica and the girls upstairs do for us, it makes a huge difference. And so, expectations have to pull back from I'm going to have to do nothing. I don't have to do inspection. That's just not realistic in selling a house.
And pricing your house is so important right now.
Bingo.
There's been a lot of pricing all over the board. When we're pulling comps right now, we had a meeting this morning and we were talking about there's so many outliers. You'll see one particular house in a neighborhood who sold $100,000 higher than everybody else. That's probably not the market for the neighborhood where everything else sells is. So pricing it properly is more important than ever, because homes that aren't priced, homes that are overshooting the market, they're definitely.
Well, I'm going to give you a good example. So in a neighborhood very close to where we work here, there are 2 ranch homes on the market this weekend. Now there are more ranch homes on the market out there, right? And this one ranch home that was not our listing was on the market earlier in the year for $875,000. 2 months ago they went on the market, or around 6 weeks ago. And they definitely overpriced it even in a great market. And so they have been over the past 6 weeks dropping price, trying to find those buyers. Well, in the meantime, other listings come to market. One of our listings came to market and it was a beautiful house. It would have sold probably for higher 2 months ago, but they realistically priced it. And what I saw this weekend is that house went under contract. And what happened is where that house went under contract, this house has been out there for a while, actually lowered their price to that same price, but they're still on the market. So think about probably that buyer was looking at these 2 houses and said, well, which seller's going to play ball? And which seller's going to get to the price where the market's actually absorbing? And guess what? This house that sold or went under contract this weekend still sold for a great price. We fell in love with the March prices. Those are kind of gone.
But it's important to price your house appropriately. Be ready to take an offer at or even slightly below your asking price. That sellers is the market we're in now. We're not talking $50,000 under your asking price, but price your house at a place where you get an offer at that price. Got to be happy.
Which allows some room for negotiation. Remember, Denver, Colorado, all the predictors, great economy. Great location to live, great climate, and a limited amount of housing, you're still going to do fine. We're going to be back here monthly with some Facebook Live videos. We'll be expanding back into our YouTube videos. If you have questions, please type questions into the comments. We'll be glad to get back with you. If you are interested in buying a house or selling a house, please contact us at 303-539-5228 or go to our website, www.stellarrealestate.com. I'm Blair.
And I'm Emily.
And we'll see you next month.